Ryan.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Just after 3 p.m. Eastern Time, we got about 53 minutes to go until the closing bell, and we got markets pulling back, and we kick off the program with platinum. Why not? We're going to jump around. Platinum had been the biggest winner on the way up, and metals having quite a pullback. Platinum off by 13.4%. Now, what's remarkable is on platinum, we had an all-time high. That's a weekly. You go all the way back to the highs we had in 2008, which was 2308. Was that high? And you just got there. Did we get there the prior day? Okay, we did get there the prior day. Yeah, so just last week, nonetheless, platinum. And you're doing it with volume, folks. We're going to go down the line. Look at this volume in metals. Platinum off by 13.5% right now. Silver off by 6.6%. Silver, 241,000 contracts. The most volume by far we've done going back this year. And on a weekly basis on silver, folks, this week, now you say this week, it's Monday at 3 o'clock, and silver has traded 241,000 contracts. Now, last week was a holiday week. It was still a big week for volume to the upside. But look at how on a constant basis, prior to this run that began in October, maybe September, you were doing 260, 270, 300,000 contracts a week. We're doing that in one day today with silver. Friday's volume was huge, but boy, you got an engulfing, a bearish engulfing, the whole body of the candle engulfing what we did on Friday and then some, and you're doing it on volume on the daily. You jump to the weekly on silver, as I mentioned. It was a strong run up, but not as big as the first acceleration in October. October, you get up there on a weekly basis, 757,000 contracts, and then we push higher. Now, gold. See, gold's off by 4.3%. Same deal. We have an engulfing candle the whole week already, and it's only Monday. Okay, you check out the daily. Yeah, and you're engulfing a lot more than just Friday's action in gold. The entire week, last week, 1, 2, 3, 4. 4-day trading week last week. You take it all away Monday. And, again, markets closed on Thursday for New Year's Day. Volume-wise, on a daily basis, actually not as much volume as we had on some of these gold days. Remember, silver blew everything away. Okay, and this is how it goes. When you get this type of a run-up, exacerbated wins, they'll pull back with that same exacerbated volatility. Okay, and that's what you're seeing right now. Silver's been the hero on the way up. The pullbacks are going to be sharper on the way down. The same way in platinum. Silver right now, blown it away on volume. On a gold contract, though, you're not doing it. Not to the likes that we saw in October. Okay, and all you're doing right now is coming back and testing the October lows in gold. So, longer term, right? Dollar's fine. Okay, dollar's not even moving today. Yields, barely moving. Higher by 5 ticks right now. But this is a metals move. Things got a little bit parabolic. And protect yourself out there, folks. Okay, put a stop in place. There's an opportunity cost, of course, if you get stopped out and this thing bounces. And you better believe it might bounce. Okay, when you can go up $10 down, $10 one day, yeah, there could be an opportunity cost. But boy, silver right now, you're talking about almost 30 days. Silver goes from $50 up to $80. It's been a heck of a run, folks. So protect some of those profits. Jump over the XAU, off by 4.8% right now. HUI off by 5.3%. Some of those silver equities, okay, you're down today. First Majestic off 3.2%. But these things weren't even moving on Friday. Because I think a lot of equity traders out there were making the bet that silver was getting a little bit parabolic and a short-term squeeze. Doesn't mean longer term that it doesn't have wings, folks, because metals do. I think longer term, the dollar's under pressure. We see rates a little bit lower again today. Okay, we jump over to the dollar, and we keep pushing this bottom channel line, right? We've been down here since June. This channel line, the lows of 2008, where we were in 11, almost in 13, 14 as well. You come down and touch that area at the end of 2020-21. On the top side, it's so well defined as well. And we've been chopping around on the bottom side. And now 100 looks like it's turned into a little bit of resistance. Now, the cool part about this, okay, is that you got two areas here. You got 100, which has been a big number, right? It was support and now it's resistance. And then you get this channel, and one of them's going to break, and they're both going to merge. And with a new Fed chair, I mean, we keep saying it, right? We're going to get a new Fed chair soon. Okay? It's almost January 1st. You're coming into January. Even if there was not as much attention being paid to the Federal Reserve as there usually is, I mean, it's a big deal when you get a new Fed chair. Always. But the pressure's on from the president. In normal times, okay, in more normal times, we'll say, you're getting that nomination a few months ahead of time anyway to make the transition, okay? Now the pressure's on, and maybe we get a nomination a little bit earlier than that. The president's hinted sometime next month. So that's going to be pressure on yields lower, and that's going to be pressure, if yields are lower, on a weaker dollar. Now you go longer term, and yeah, you're talking about an area right now. Hey, interesting times. I think we're setting up for a great 2026 for a little bit of volatility because guess what? Yields are going to be in focus. Nobody really knows, right? We get this dichotomy of a market that has jobs in focus, right? We're only gaining maybe 20,000 jobs on a 3-month basis. Are we even gaining that right now? Unemployment going up. Wages still going up, and we still got inflation pushing somewhere around, 2.7 to 3%, best estimates. That provides for a very volatile trading environment when even the Fed says this is a difficult scenario. We're not often dealing with a weakening economy, a weakening jobs market. At the same time, we have to worry about potentially that we have inflation. But inflation's been abating as well. It has. And my perception is the Fed is going to make sure that they're worried about those jobs because that's where the data is lining up right now when this economy is barely adding any jobs and unemployment's rising. And with that in focus, that should keep pressure on that dollar. But we're going to find out because you're bumping up against that price. You're either going to, you got your breaking points, 100 and 98, and those two are converging. All right, we'll take a look at the S&Ps right now. We'll jump over to growth stocks in a moment. We got NASDAQ off about 110. But on a daily basis, check out that volume, right? Yeah, it is holiday trading, not in the metals market. You're on a metals desk, you're a metals trader. You're sitting at your desk today. You better be, man. We don't see days like this. Pretty historic day. Gold, silver, platinum. All right, folks, stay tuned. We got S&Ps off by 18. We're coming back talking to Steve Rhodes. Always a great segment. Don't go away, folks.